This is Beyond Perception, where it's all about breaking out of limited perception and waking up to our human potential, our true self, and to making sense of the world. I'm Simon Dilling, and I have the true honor to speak today with Egon von Greyerz. Born with a dual Swiss-Swedish citizenship, Egon's education was mainly in Sweden. He started his working life in Geneva as a banker and thereafter spent 17 years as a finance director and executive vice chairman of Dixons Group. During that time, Dixons expanded from a small photographic retailer to a FTSE 100 company and the largest consumer electronics retailer in the UK. And since the 1990s, Egon has been actively involved with financial investment activities and founded Matterhorn Asset Management in 1999. And Matterhorn Asset Management is based on wealth preservation principle, and now the world's leading company for physical gold and silver outside the banking system, directly owned by the investor. Their 4 vaults include the biggest and safest gold vault in the world, located in the Swiss Alps. Clients are high net worth individuals, family offices, pension funds, investment funds, and trusts in over 75 countries. With 50 years experience as an investor, Egon makes regular media appearances and speaks at investment conferences around the world. He also publishes articles on precious metals, the world economy, and wealth preservation. Welcome, Egon.
Simon, good to speak to you. Well, that was a long introduction.
you deserve it.
and when you add the 50 years of activity, it sounds even longer, but it's been a good life, so I cannot complain. So.
Yeah, to be honest, I don't really know how old you are, but I would have judged around 55 or something like that.
Well, all right. I don't know what you're after, but you get no prizes for that. Yeah, that was a massive underestimation, as you know. But it doesn't matter. I'm far beyond retirement age, as you know. But if you're lucky and you have good genes, you just continue. And if you're lucky to have a passion in life, that keeps driving you even better. So therefore, and that's what I have, and I will continue to work for as long as my brain functions and my heart beats, and that could stop tomorrow, or it could be another. I could reach 100. Who knows? It's not that far away, 100, by the way. So.
Yeah, one of the things I'm really curious. So you had this very successful corporate career to then start Matterhorn Asset Management around 20 years ago. And you just mentioned your passion. And first of all, I'm curious, what is your passion? But also in the introduction, I mentioned that your interest for wealth preservation. And one thing I'm really curious, was your interest for wealth preservation that led you to start Matterhorn Asset Management?
Well, I've always been interested in understanding and evaluating and protecting risk, and I suppose even in my personal life, but especially in my corporate or business or investment life, and that's what I did back at Dixons. Also, the thing is, everyone can cope with the upside, because the upside takes care of itself, but it's the downside you have to protect. Right now everything is so easy. People are just borrowing and it's like, and it costs nothing to borrow, so therefore people are taking an enormous risk. But if you have a long professional career or a long life behind you, you've been through many periods and many downturns. And you can see that that's what wipes you out if you're not protected, and that's all parts of life, and therefore that's why really wealth preservation is just another risk. Really, you're looking at the downside there, because there's so many people who make a lot of money in investments, but when the market crashes, they lose it all, especially if they're leveraged. And today with world debt going up exponentially, the leverage is massive. And so when the next downturn comes, there will be massive wealth transfer, and a lot of people will lose a lot of money, because I've talked about these many times, about these bubble assets. I consider stocks, bonds, property market, that those are all bubble assets that are financed by this escalating or exponentially growing debt. obviously people now, people don't even see risk today. They're just piling into the stock market. And I think actually short-term stock markets can go higher, because I said that it looks like we're going, and I had forecast this, what we're seeing now, in spite, there's a massive disconnect between markets and the real economy. I mean, the world is suffering tremendously now, all around the world. People have lost their jobs, or they're furloughed, or they and a lot of people have lost their companies. A lot of small businesses gone out of business, so it's actually extremely difficult times. But the economy and markets especially ignore that today. So therefore. You're seeing a euphoria that I did expect, actually. So and that might continue for another few months, or maybe even 6 months. But so you'll get this final hooray, or the melt up, and that's what we are seeing now, and that is a fitting end to probably one of the biggest financial bubbles in history, because this time it's not just one country; it's worldwide. There is no country anywhere that can save the rest of the world, because this is, you have the US is massively indebted, of course, the whole of the EU indebted. China's debts have grown exponentially. Japan, they're bankrupt. I mean, they've been bankrupt for years. I mean, the Japanese economy will one day, disappear into the Pacific. So that so there are lots of problems everywhere, but nobody sees them, because you have this, you think that central banks will solve anything, but so one of the simple conclusions that I've made, and everybody should make, but nobody wants to make it, is that you cannot create wealth by printing money. And if that was possible, if you could just print more and more to save the world, why don't we all stop working, print more money, and we live in Shangri-La, and we get some artificial intelligence robots making the things that we need, etc. And the rest of us just have happy days. Well, first of all, that would be horrible. I would hate to stop working, and secondly, it doesn't work. So, coming back to this is a long answer to your question about risk. So, yes, risk has been, not really a passion, but I suppose is part of my analytical mind, that I like to understand the downside, and that's really, as coming back to your question again, that's why at the end of so I had a long corporate life, and lots of fun, learned a lot. And then I decided that, into the 90s, I mean, this is a little bit where we have a common background. And when I left Dixon's and corporate life, I was lucky to have a very fast career and a fast growing business that I was part of building up when I was very young. So I was about 43, I think, when I left corporate life. And which is a bit early, but I thought I wanted to do something on my own, so I started my own investment company, and that then led to creating Matterhorn Asset Management, which was first just a private company with some private investors that I invested with, but all is my company. And then in the early 2000s, I decided that the risks are now getting too high, and we then went into, in a major way, we went into physical gold, buying physical gold for wealth preservation and storing it outside the banking system. And then 2-3 years later, we created a system also for opening up to outside investors, and so that we help people to preserve wealth. And that's if you want, that's become, so that was quite late in my life. I was getting to retirement age. Not that I don't count retirement. Retirement doesn't exist at our level, at the things we do. Sure, if you're working in a factory doing the same thing all day long, then you want to retire. I have full understanding with that. But if you're lucky, like some of us are, that we can use our brains and think and have freedom, then of course retirement doesn't exist. And so that's why now. My passion at this phase in my life is helping other people to protect their wealth. Now, few people understand that. That's what I said before. There'll be a lot of wealth that's going to be lost in coming years as markets implode, which I'm absolutely certain about. But you know, there are a few people who understand it, and of course we are, you know, getting clients from all the world, around the world, and we're helping them to you know, what we do in precious metals, gold and silver, is really the ultimate form of wealth preservation. Gold, remember, gold is the only money and only currency that has survived in history. All other currencies go to zero, always have done in history. So that's why, you know, if you measure it against gold, gold is not an investment. Gold is just it's just the only form of money that has that maintains its purchasing power. So if you look at gold as a straight line, zero line, you know, all the currencies are collapsing against gold. They've done throughout history. And in this phase now, if you take since 71, all currencies have gone down 97 to 99% against gold. Remember, gold is that stable purchasing power. That's all it is. And if you take since 2000, a few people realize that since 2000, gold is actually, you know, all currencies have declined between 80 and 85%. All currencies, including the dollar, the euro, etc., have declined 80, 85% against gold. So gold is actually the best performing asset in this century. Nobody realizes that, because governments don't like gold because it reveals their deceitful actions in mismanaging the country and mismanaging the currency. Investment bankers and asset managers don't like gold because they don't make enough money on it. They want to churn commission and buy and sell stocks all day long. So therefore, it's a relatively small market today. That's going to change. People, if the things happen that I expect, and I'm quite certain they will happen, and we get the problems in the world that I expect, then, you know, gold will become much more significant. The problem is that there isn't enough gold at today's price, because you can't really make more gold. You know, there's only 3,000 tons every year that is mined, and that's minuscule. And therefore, the only way that people can get more gold is actually that they have to pay up for. Price will go up. So instead of buying, you know, buying a kilo of gold, which costs $60,000 today, you will buy a kilo of gold maybe at $600,000, because so the increased demand will be adjusted or met by higher price, not by more gold, because there isn't more gold. So, you know, it's a very simple business, and it's a wonderful business because you meet free thinkers. And you know, come back again to how we met. I started talking about it, but you know, when we met, we both realized that, because when I stopped corporate life, I had a bit more time in the 90s. So that's early 90s. That's when I started, you know, going to Tony Robbins conferences or shows, and also reading a lot of these books and other books, and really enjoyed working on that part of my soul, which when you're in corporate life, you don't have time at the same time. So that was an interesting period, and I spent a lot of time on in the 90s. I haven't revisited Tony Robbins in later years now, but I'm not in any way trying to say that I got it all, because we all have a lot to learn. But it's just that it's not a priority today, although of course it's already a lot of it is in my backbone, in my genes now. So, and I really enjoy that period. And obviously I, you know, studied a lot of other things, Chopra and a lot of these interesting books and people. So you know, that's so. But right now, as I said, so I have this challenge of helping people, and we feel passionately. And the people that are our clients, they are free thinkers too. There are people who think outside the box. There are people who actually are worried about and see the problems in the world, and therefore we are very privileged to meet those kind of people that are open-minded about what's happening, rather than just follow the latest news on television or from the newspapers. So that's a potted background of what I've been through.
Yeah, thank you very much. There are so many follow-up questions to what you just shared with us. One of the things which struck me, and for context, when we met last year, you were a speaker on a conference we organized, and since then I've been following your blog. And one of the things that intrigued me most was that you write and talk about the big picture and also the financial system in its totality, and also the flaws of it. You just mentioned a couple of the symptoms and also refer to the financial system. And one of the things I wanted to ask you to, like, if you look at the core of, like, I mean, you mentioned before debt and bubbles, etc. But if you look at the core of the financial system, why would you, do you think there's a fundamental problem with the system in itself, and that it is not optimally designed? And if it were, what do you think are the problems?
Yeah, well, that is an excellent question, and obviously these are the things that I've been thinking about, worrying about for a big part of my life. But what people don't realize is that history tells us most of the things. Everybody who lives today thinks it's different today because I live. Because I'm here is different. Now it's different. It isn't different. Everything that we see happening has happened before. Everything. Sure, we didn't have Facebook and we didn't have iPhone and we didn't have the internet, etc. But that doesn't change anything. The cycles are still there. It might take slightly longer, but it have taken longer before, but still, the same cycles are there. And really, what it is for some reason, the way we were constructed, and then don't ask me why, is that human beings carry within them the seeds of their own destruction. That's really what it is. So you take a country, the country, somebody comes to power, whether it was a king or an emperor or a president or a prime minister, they get power, and let's say initially, he's doing well. I mean, it's like the Europe or America in the 50s and the 60s. Things were growing, we're investing, debt was under control, etc. And then all of a sudden, problems start. If you take the example of America, you have the Vietnam War, costly war, and of course then the debts. So now all of a sudden there were no surpluses anymore. Actually, the US is a bankrupt country because they haven't had a real budget surplus since 1930. So for 90 years, the US hasn't had a real budget surplus. They had 2 in the 40s and 2 in the 50s, very small ones. People think that there were surpluses at the end of the 90s in the Clinton era, but that's nonsense. They were not real surpluses. They were just fake. They were just taking some money from below the line and putting it above the line, because US debt continued to go up during the Clinton period. So the net effect was actually they were making deficits. So here you're looking at a country that has been making deficits, as I said, for 90 years. So now, and they were clever enough to create this. When they started to escalate after the Vietnam War, and Nixon had problems then because the currency was under attack. And you take President de Gaulle at the time, he was clever because the US had debts to France, and he said, well, I don't trust the dollar anymore. I don't want to be paid in the dollar. You pay us in gold. And of course, the US didn't like that, because that was the agreement. There was still gold. Central banks between countries, they could ask for payment in gold. So gold was backing the dollar, and therefore all the currencies, because the dollar was, our currencies were fixed to the dollar at that time before 71, and therefore the governments could ask for payment in gold. So there was a gold standard, but the gold standard for normal people didn't exist, and you couldn't. People couldn't change their dollars or their pounds or the euros or their marks for gold, but governments could. So, but Nixon, of course, said, well, no, we're not going to give them our gold, so we'll stop this and we'll take away the gold backing of the dollar. So that was in 71. So that's what, as I said, happens every time in history. When a country gets under pressure, they start printing money. And you can't have the discipline of the gold standard then, because you can't print gold. So therefore, they can't live with that. I mean, the same. I'll give you an example. In the Roman Empire, as the peak was around the birth of Jesus, of the Roman Empire, and around 200 or so, or 170 AD, it started to decline. So they had a coin called the denarius. That was a silver coin that virtually had 100% silver content. That was about around 180 AD. 100 years later, that coin had 0 silver content. And that was a way of printing money in those days. So they put other copper or zinc in, etc., other metals. So that is a devaluation or debasing of currencies then. And so we jump back to, and that's happened throughout history. So it's nothing new, but people, as I said, always believe it's different today because I'm here. So we come back to today, or to the 70s. Then. So Nixon took away the gold backing, and then that means that you don't have to back your money with gold, and therefore you can print as much as you want. And that's what the US started. So then since the 70s, you could look at any graph of US debt, and it's gone up exponentially. And of course now in the 2000s, even more so, because we had the 2006 to 9 crisis, and that was a period of massive money printing to save the whole financial system, which was minutes from collapsing. And they saved it by printing tens of trillions of dollars and guaranteeing and printing. But that was not solved. The problem was not solved. You cannot solve a debt problem by issuing more debt. That would be too simple. As I said before, then we'd all live just on printed money. So that wasn't the solution. They just deferred it. So if you look at global debt, it was 80 trillion in 1998, I think. It was 125 trillion in 2006. And today it is 275 trillion. So it's gone up exponential. So just in the last few years, it's grown. It's growing faster than the whole of the debt in the preceding period. So it's now. So we're getting into the exponential phase now. No governments talk about that. No normal people know about it. They just think, yeah, well, there's money because it's being printed all the time. And of course, so back in August, September last year, 2019, the central banks, the Fed and the ECB started saying, well, there are problems in the world. We are going to print as much money as necessary. They didn't say what the problems were, but it was clear that these were now the old problems from the 2006-9 crisis coming back within the banking system, and the banks were under pressure. So they started printing money then. And then, which you could say was almost fortunate for the central banks and the governments, came the coronavirus at the beginning of this year. And that actually made it possible for them to blame the money printing on something else. So they blamed on the coronavirus, because the coronavirus is not the reason for the problems in the world today. They were just the catalyst. So things might happen a bit faster because of the coronavirus, but it's the underlying problems of debt that is actually causing this, the problems we have now. And whether we will get a vaccine or not next year, that is not going to solve the problem. The underlying problems are still going to be there, and the world is still going to suffer dramatically, unfortunately. Sorry, maybe a bit too serious and a bit too many facts now. So you please stop me and you ask me a question.
Yeah, one of the things I also you wrote about, and I've heard about it before, but I never really thought it through. That, for example, the Fed in the US or the New York Fed, that's something you're referring in one of your articles. Shareholders are banks, private banks, which basically structure their own, or if you go back to the financial crisis, 2007, 2009, structure their own rescue funds, their own bailouts. And that was something which struck me, that seems to be a huge conflict of interest, and that basically the shareholders of the Fed or central banks are basically private banks which benefit from the measures being taken. And what's your perspective on that? And you've written a little bit about that.
Yes. No. You see, the Fed, federal bank in the U.S. federal banking system is a very clever construction by bankers. They came up with the idea, in the 1910 or 11, I think was the first meeting at Jekyll Island. They had these bankers, and they came up with this idea that they were going to construct a central bank owned by bankers that could actually then print money, create money, and that would be basically the bank financing the government. So the Federal Reserve Bank is a private bank owned by major bankers, and basically for their own benefit. And this is why, as you mentioned, when the crisis of 2006 started, and then 2008, that we were almost at a total collapse of the system. Lehman had collapsed, etc. And this is why when they just told the Fed, because the Fed is them, and they told the government that, Goldman Sachs was bankrupt, JP Morgan was bankrupt, Morgan Stanley was bankrupt. There's no question about it. But, they basically told the government, and they told the Fed, which is themselves for the central bank, they told them that, you've got to now print, you've got to save us all. And, I know bankers in all of these banks in 2008, when most of them were going to go under without this massive rescue package, all of the bankers who already had, $1 million, pound bonuses, etc., in the previous years, that year when the whole system almost went under, they all received the same bonuses as the previous year. And that shows you, and of course the top guys, the same with them, all the top guys. And of course, none of although these a lot of top guys, I mean, they were obviously responsible for this, but even if even some lost their jobs, but most of them just got bigger bonuses. So nobody suffered. Nobody was taken to court for anything. So this is a club that protects itself, and so far they've got away with printing unlimited amounts of money, and the world doesn't yet want to say, because it suits everybody within the system, they don't want to say that the emperor has no clothes. At some point, there will be a little boy shouting that, and that's going to happen within the next, 1, 2, 3 years maximum, I would say, sooner. But that's going to happen, and then this is a house of cards, and sadly, then, as I said, everybody's going to realize that this printed money has zero value. You're already getting, you got to print more and more money. You got to print more and more dollars to create, so $2, $3 to create $1 of GDP in the US, for example. And the more you print, of course, the more you print, printing money without anybody performing any service or selling any goods for it, that money obviously by definition has to be worthless. If you actually press a button, which is the modern money printing today, if you press a button and money is created, that money has zero value because nothing has been produced to create that money. So therefore, every time you print more money, the value of your money's got to go down, and that's why it's down. As I said, just in this century, all money is down 80–85%. And within the next, let's say, maximum 5 years, I would say, most currencies will go down 99% or 95 to 99% from here. Now, they're already down since 71, 97, 99, but they're going to go down another 99 to 100% from here. That means, so when they do, we will have hyperinflation because they're going to print a lot more money as currencies are debased. That creates hyperinflation. And then in the end, there will be a collapse of the system because the system will, all that weight of money will make zero difference. So that's the, I might, a lot of people think, especially people who haven't heard this before, well, who's this guy? Prophet of doom and gloom. God, who does he think he is? Important. Do you think he knows what's going to happen? Well, I don't know what's going to happen, but I'm a student of history. And I could see that it isn't different today. It's actually worse today than ever before. And if you do study history, you will see that every monetary system throughout history has actually totally disappeared or been debased. And sure, then there is a phoenix and a new currency starts again. But the transitional period is going to be a tough period. And especially since now we are dealing with the whole world. Before you could, we had the Germany in the 1920s. After they had the war reparation and they were the debt that the rest of the world lumbered onto Germany was just they couldn't cope with that, and they just printed money and you got the hyperinflation in Germany. Now that was just one country, so the rest of the world could live with that, and you wrote off the debts, and the same has happened in Argentina, etc. It's different now because it's the whole world, as I said. It's every country in the world now, every major nation in the world. So therefore, there's no one to save us if there are not Martians coming down and giving us Martian money or gold from Mars or whatever it is. And that's why it is different. I'm not a pessimist at all. I'm just someone who analyzes risk, I analyzes the facts, and I'm saying now the risk is greater than ever. And I don't, it's only a question of when. It's not a question of if. It is going to happen, but we don't know exactly when. But right now, I don't think it's going to take that long.
There are two quotes I would love to read, and one I have seen you frequently citing. One is from Amsel Rothschild, and he said in the what was it, like 18th century, "Permit me to issue and control the money of a nation, and I care not who makes the law." That was something which like made me like scratch my head. And the other one I also read, which was like really interesting. That was Thomas Jefferson, the founding father and president, talking about the danger of handing over the issuance of the money to bankers. He was saying, and that's something I read on your blog, the central bank is an institution of the most deadly hostility existing against the principles and form of our constitution. I am an enemy to all banks discounting bills or notes for anything but coin. If the American people allow private banks to control the issuance of the currency, first by inflation and by deflation, the banks and corporations that will grow up around them will deprive the people of all their property until their children will wake up homeless on the continent their fathers conquered. And I hear you also writing about the maldistribution. And do you think that like this goes hand in hand, that the system is designed in a way to, like, I mean, you're referring to inflation, to kind of what's the opposite of preserving, to destroy wealth for the general population?
As I said before, is inbuilt in the system, because this is why you get empires and empires. They reach the peak and then they disintegrate. No empire has grown forever. It doesn't happen because it's you reach a point when you've stolen money from all the countries that you invaded, and you've used all of that money, and then you take all the the Spanish, for example, they went to South America, took all the gold, lived on the gold for a while. The Portuguese did the same, and then they live on this gold for 20 years, 50 years, or whatever, and then it runs out because they've spent it all, and sadly they melted all these masterpieces down from the Inca gold, etc. Beautiful gold pieces. So they melted it all down and made it into money, and then they spent it. And this is what happens. So when they run out of money, this is when that's when, as I said before, they start printing. So it happens time and time again. You had the same in the 1700s. You have it in France. John Law, who took over, a Scot who took over, but basically controlled the central bank of France. And then he had these schemes, the Mississippi scheme, and he made everybody buy shares in worthless land in America, and you had the South Sea bubble in the UK, etc. So it's part of history, and that's why, as I said, it's so easy. If people studied history, they know that it was going to happen, and therefore you don't need to be clever. You don't need to be Nostradamus, and so therefore the points I'm making here are just a totally normal event that happens every 100, 200 years, whatever, in history, and it's going to happen again. And as I said, I'm definitely not a pessimist, but I can see, you say Rothschild. I mean, he was the model. Rothschild for give me control of the money. That's a model for the modern Fed. He saw that. If you're in charge if you control the money, you don't have, you don't care about power, because the money is the power. And that's what the Fed saw also. But, you get to a point when it goes too far, because if you control real money, as I said, that's fine. And it lasts for a while, whether that's gold or real money that has a stable value. But when you start controlling money that you have to print and paper money, then of course, in the end, it has zero value. And yeah, you two good quotes, and his history tells us that that's what's happening. So that's why it's so fascinating, and that's why, you know, I'm passionate about it. Sure, the consequences of what I'm saying for the world is going to be pretty tough, very tough, because when bubbles burst, a lot of people will suffer. And you know, yeah, there will be you know, economic misery, there will be famine, there will be social unrest. You know, the differences between the rich and the poor, as we all know, are much too great today, and that's what revolutions come from. And we will have type of revolutions, and we will have, you know, social unrest, and we're seeing it already. It's happening around the world. It's already started, especially in America, but also in France and in lots of places, Germany. So the transitional period from this era now, that where we are, the whole world believes that we are very wealthy, but it's actually all based on debt. You know, the transition from that to, as I said, first hyperinflation and then a deflationary implosion of the financial system. This is what I expect. That's going to be tough for a lot of us, for everybody. It's going to be very, very tough. But that, in my view, is the only way that the world can continue to grow long term. You cannot grow on top of a debt of 275 trillion today. And if you add unfunded liabilities, pensions, medical care, and if you add derivatives of another 1.5 quadrillion, and you get up to a couple of quadrillion, and those derivatives, the banks are going to print to save those derivatives, because they will also fail. They'll be the counterparty will fail, so they will print. Central banks will print that money too, so they'll print quadrillions, and then it will all implode. And then, as I said, we will be a number of years of suffering. But that's the only then we get down to basics again, and at a much lower level, in my view. And it's from there that the world can grow again soundly. Until the cycle starts again, but that will take whatever 100 years or more, or 200 years. You know, but that's the cycles we've seen throughout history. But as I said, we've never seen a cycle where the whole world has been involved in a way that it is today. But you know, I often come back, and maybe you have the, you know, often come back to that. We built our values in life today, and the world has on the golden calf, you know, and material values, and that's why we, you know, and that always happens at the end of an era like this. You know, you do actually, you know, your God is the golden calf, and sadly, people lose all normal values and all the good values. So therefore, you know, in my view, this is the good part of the system also imploding at some point, because then we return to real values in life, you know, ethical values, moral values, coming back to the family. Because I mean, the family, which should be the kernel of society, I mean, that's disintegrated today. And you know, very few families ever have a meal together today. Most people, even in the Western world, they don't even have a dining table to sit around. They sit on you know, they eat standing or on the couch in front of television with their iPads or iPhones. You know, so you know, this is, you know, once you get down to basics again, then family, the group of family and friends becomes so important. And you know, as I often say, there's so many things in life that are not based on financial or material values. You know, you take, as I said, friends, family, which is the most important of everything. But then you take nature. You know, I mean, I'm fortunate to live near, or part of the year near nature that you see behind me. You know, mountains or forests, or just walking in nature. That's free, and it's wonderful. Nature is one of the most wonderful things that's happened to us, and all seasons also. And then you take books, you take music. You know, there's so many things that are free. You know, and sadly now we based our whole lives on material values, and that is so false. And this is why, you know, systems do break up and do collapse, because they're based on the wrong values, and that's why, in one way, this next phase will be, as I said, terrible for a lot of people, but good for the world long term. And it has to happen, and it always has happened.
Yeah, thank you very much. That's super interesting. And for the people out there listening to this conversation, some people might, and that's also something you're writing about. That, for example, you're writing about that published GDP numbers are fake. So like someone like no, but this expert, this journalist, like the state like publishes like a completely different narrative. Why should I be believing this? And you're writing about that. For example, in 2000s, like real GDP in the US was adjusted for real inflation actually negative, but that's something like nobody really understands. Like it's like, of course a generalization, but again, and I mean you also write about manipulation of the gold market, for example. No, that like for someone who's not familiar or like doesn't know the backgrounds or where to look at, it's really difficult to make sense of what's going on. um,
Yeah, no, it is. And of course, you know what happens in this final phase of a bubble or a major cycle is that people become lazier and lazier. They don't want to work for money. They want everything free. And that goes also for the whole of the media, the journalists, television, papers, etc. They do no analysis whatsoever today, that whatever they're fed with by governments or statistical bureaus or whatever, they just publish that, and they use the comments of whoever gives them the information. They don't even think for themselves. Nobody digs into it and to understand what is actually happening. So this is part of also the phase we are in, and it's the same with schools and everything. I mean, the standard education, standard of knowledge in schools is deteriorating dramatically. If you compare, I compare myself to my father. I mean, he was much better educated than I was, and I went to good schools. And if I compare myself to my children or grandchildren, I'm a lot better educated. So it's going down dramatically, and that's across the board. The world's become lazy. And it's all, look it up on the internet. You don't need to have any knowledge anymore. Just look on the internet. Sure, I'm generalizing. There are a lot of people who are working very hard and coming up with wonderful inventions. So, but on average, people have become very lazy.
One of the things I heard you talk, like that was the first time I, like, with you listening to you when you like, and you mentioned it before, but I would love to like talk about this, like possibly like a little bit more to really make that understandable to anyone who's listening to that. Because if you're talking about purchasing power, and like what I get from listening to you, that it's a big fallacy to measure purchasing power versus, for example, the dollar, like as a reference to measure your wealth and like dollar, or just look at a stock market performance versus dollar. But what when I understand you correctly, what you're recommending is to use gold as a measure for purchasing power, and measure, for example, the value of a dollar versus gold to really see what's happening, for example, with paper money. Like, does that make sense what I'm describing, or can you illustrate that a little bit better? Because you referred before to that. I think it was something that over the last 50 years, the currencies lost close to 100%, 98% of their value measured in real terms. And that, like, if someone hears that the first time, like, wait a minute, like that, like, how does that work? Like, but it's really important to start understanding.
Yeah, you're absolutely
Happening.
right. I mean, there's Simon, it's a fallacy to measure the value of things, whether it's your house or your income, or your stock investment, to measure it in a currency that is being debased or going down on a daily basis because of the money printing. But that's, people don't, as I said before, people don't understand gold, which is stable purchasing power. So they only the way they have to measure it is in their own currency. But that, I mean, I don't remember the figures now. If you take 50 years ago, I mean, a Big Mac will cost 25 cents, something like that, and a house a few $1,000s. No, everybody thinks it's inflation, and you know, house prices are going up because they're such a wonderful investment. That's nonsense. House prices are not going up. Well, they have recently because of the you know, the interest rates are down to zero. You can borrow in Switzerland. You can borrow 10 years at or even 15 years at 1%. So they have gone up more now than inflation, a lot more. But really, over time, house prices don't go up. They go up by, I know, if you look back in history, go up by 1 to 2% a year. If you look back 100 years or 200 years, because that's the normal inflation. But now we've had massive, because of the money printing, we have had massive asset inflation because all of this money that has been printed. Now, when I say printed, it's not just central banks. Remember that. Banks are the biggest, commercial banks are the biggest money printers, because you know, we have this fractional banking system, which means that if you have 100 euros, 100 Swiss francs, $100, put it into the bank then keeps 10, say roughly 10 of those dollars in reserve, and then lends the 90 to somebody. And then the one who gets the 90 spends it or buys something, etc. And you know, that money, the 90 comes back into the bank, and then the bank lends it 90% of that again. So there's $81 they lend. So that goes on. And this is why the commercial banks are the biggest money printers. And that's why we are seeing this continuous debasement of money. But as I said, governments never publish, you know, no, your money has fallen again by 5% this year in real terms. They would never do that, of course, because that's a guess. You know, they have to fool the people all of the time, otherwise they're not going to be in power, and therefore they can't tell them the truth. So that's why, yes, people are, you know, and people, especially if we talk about, and maybe some of your listeners are bigger investors, they measure their portfolio of stocks or whatever it is in dollars. But, you know, look at what's happened to the dollar. As I said, the best performing asset class in this century is gold. And gold is stable purchasing power. So it means that when you measure your money that you made in the stock market, and if you follow the index on the stock market, all you're really doing is looking at it in a currency which is falling by the day. And if you instead took it and measured it in gold, for example, which is stable purchasing power, then you would see that you haven't made any money. You've actually lost money. So this is, as I said, this is the fallacy of our system today. But you know, but that's part of this whole system controlled by central banks, and you know, they want to fool the people and make them believe that, you know, everybody is well off. Nobody realizes that the 95% of people just have debts, and 5% have wealth, and the ones with debts obviously are going to suffer tremendously in coming, because also, you know, having interest rates at 0% or 1% or negative rates in some countries, you know, that is absolutely totally ludicrous. If you study economics, you learn that investment equals savings, i.e., in order to have real, genuine investments, not debt-based, but real investments, you've got to have savings. And in order to have savings, people have to have a return on the saving. Today, nobody gets any return on savings. You don't get any. You know, before you had 5 or 10%, and you could save money and then actually, you know, live on that when you're retirement. But now, by the time you retire and you save money, first you earn zero interest or even negative interest, and secondly, by the time you know, if you have it in the bank for 50 years, you have nothing left in today's purchasing power. So this is, you know, the governments and central banks are totally destroying our money, and that's why, you know, this will end too, and it's going to end soon, as I said. So that's really the story of money, and as I said, it's, you know, yeah, come back again to study history, because you don't actually need to. You don't need to make forecasts. You just need to study history. You don't need thousands of economists and you know, in government, central banks, etc. And they try to make, you know, forecasts. Yeah, it's going to go up, inflation up by 0.5% and GDP up by 2%, whatever. You don't need to make all of those forecasts because long term, you just look at history and see what's going to happen. And short-term forecasts for a year are meaningless anyway. Now it's fascinating, but you know, okay. We're talking a lot about the economy now, and of course, but the economy is also life, because I mean now, especially, there's so many people suffering today. So many people now who don't have jobs, so as I said, or are and more and more are actually losing their jobs or losing their businesses. So it's a tragedy. It's an absolute tragedy. And it's not what it's too big a subject to talk about the coronavirus, but that's in itself, as I said, it's a catalyst, but it's a very serious catalyst, and governments have most probably mishandled it in a big way, and we see the consequences. But as I said, it would have happened anyway. It's only a matter of, because the economy is still in a very bad state, and the financial system.
Well, what I was also reflecting upon, that you have been sharing about these circumstances for quite a bit of time, I think for probably around 20 years or maybe even more.
Yeah.
And probably that has been a bit of an unpopular position to be in or communicating. And have you faced criticism for your views?
Yeah, well, you know that bearers of bad news are normally executed, or sent to Siberia or wherever. So I'm still around in the West, so I'm all right for the time being. But maybe in this new, censorship is growing by the day, as you know. There's no free speech anymore. No, and when you even have these YouTube, FaceTime, and all of these, when they're censoring everything that doesn't suit them or suits the system, I mean, that's absolutely terrible. There's no free speech so far. I'm not criticizing anybody directly at all. I'm criticizing the system. I'm just saying, I'm just analyzing the situation, what it is. I'm not attacking individual people or anything. I don't think, I said that in articles also before, it will make absolutely zero difference if Biden or Trump wins this election. Looks like Biden has won clearly, but it wouldn't make any difference more than marginal differences. The situation they have, and the next president has inherited, and the debt burden that he has no chance of repairing that in any way, whatever his optimistic views and thoughts and teams that are gathering believe. Absolutely nonsense. There is no chance to change the course of history right now. Again, so people, yes. When I first had these thoughts, I think I had them probably in the early 90s, that the world was going in the wrong direction. We're coming to the end of an era. And of course, you start by telling friends and family, etc., what your beliefs are, and nobody wants to hear it. That's absolutely right. So then, but now, I have as a company, and have a forum. A lot of people listen to what I say, videos, interviews, blogs, as you say, articles, etc. And of course, what I found is that we are preaching to the converted. It's no use at this point. Although I see the risk clearly, I see the solution. Gold is not I don't see gold as an investment as itself. It's a consequence of the risks I see, and therefore it's wealth preservation and insurance. Don't see it as an investment. I think it will also be a very good investment, but that's not primarily why you actually own gold. You own gold to protect yourself against the destruction of the financial system that I see. But yes, a lot of people. So I don't have enemies, because it's easy. Because the ones who don't believe in what I'm saying, they don't listen to me. So that's why they just say he's a fool. I'm an absolute fool. Ridiculous. Here he comes again. The pessimist. They don't want to listen. So we have then some people who actually, as I said before, we're fortunate to have a big group of people around the world who are listening to this and following this, and the others can't be helped. And they will see what's going to happen, so they will clearly also change their mind. But in the meantime, so therefore, it's not really, I don't have a problem with that, because remember, I'm not on television every day on main media, etc., where of course nobody would let me be on television anyway, because nobody wants to hear bad news. So you're absolutely right. So you are, this is why, most of us cannot influence the macro world, the whole world. We can't do it. Not even a U.S. president or a chairman of the Fed. They have, everybody has a limited power, and people like you and I, it's very limited. So what we try, so what we are doing, you and I, and people who are free thinkers, we're trying to help the people in our group, the people around us, and inform them and help them in whatever way we can. One with, okay, so we have a system for protecting and ensuring wealth, if you want, so we believe in. But you help people now in the bad times. We got to help everybody you can. You got to help people in whatever way you can, because a lot of people be suffering. You help them if you can give people some food, or you help them with a bit of money, or you help them with support, moral support, etc. That's what life is all about. It's all about people helping people. That people have forgotten about that these days, because the human beings are not important in this materialistic world. But that's going to come back again, and that is always the most fun part of it. Your friends, your family. I'm lucky. I've been married for 50 years, almost, and I'm lucky to have children and lots of grandchildren, etc. And that's happiness, and then you have a few good friends, and of course, you help whoever you can in your circle, and you don't need to have a big circle, because you can't actually help the whole world. You just help the people around you, and if everybody does that, that will have a much happier world, rather than just to have this instant gratification, which is the world is consisting of today. Everybody wants just be gratified straight away. That's not what life is all about. As we both know, the most wonderful thing in life is giving. That doesn't mean that you have to give me material things. You give help, you give of yourself, etc. The best givers are the ones that they don't actually have to give anything material. It's just their personality, and so that there are so many aspects that have got lost in this world, and as I said, as the downturn comes, they will come back against all of these values. Family values, moral values, ethical values, etc. And that's, I think, it's a good thing.
Yeah, thank you very much for this reframing of not so fortunate outlook if it comes to the financial system. One of the things I'm also curious, of course, we will share your webpage, your blog, etc., with the show notes, so that people can follow you and start reading the content you're providing and creating. One of the things, though, I wanted to also ask you, because my thesis is that we are basically grown up being used to dependency on experts, on whatever, like journalists, etc. What would you say are good resources or ways to inform oneself? You mentioned before study history to kind of like become a bit more autonomous and starting to like understand a bit better what's going on.
One thing I've learned is you cannot tell people what to do in the world, because you can only tell them your beliefs and your passions. But it's like, take a just simple example. You can't tell someone to lose weight or stop smoking, whatever, because they're not going to listen to you. It's only when within you decide yourself that I want to change my life. And of course, this is where somebody like Tony Robbins has worked out good methods for doing that, and methods that actually also very often have a long-lasting effect on people. But otherwise, most people, as I said, there's no use telling people what they should do or not do. And I'm not trying to opt out. Or if people are interested to see what's happening in the world from the way that I see the world, but a lot of people are not. But if they are, it's the same as I'm sure the Tony Robbins fans or group. they started with Tony, and then they widen all the time, and they get, they learn about other books, other speakers, etc. So because your group or your group, but the people you have been spent a lot of time with, the Tony Robbins crowd, self-improvement crowd, etc. They are searchers. Most of those people are searchers. And I'm not saying always that the searcher is the happiest person, but at least the searcher gets information, because I know a lot of people are very happy and they're not searching at all, because they're happy themselves. They don't need to search. And then I know people who are genuinely happy without searching. So, but a lot of us, as I said, including the whole of people all around Tony Robbins, people listening, they are people who are searchers. They want to see how they can actually improve their lives and also starting with themselves, and therefore helping others also. So there's so much on the internet that there are so many newsletters, there are so many free things on the internet that where you can learn all about the alternative economy, if you want, and the real facts. I don't want to mention one or two just to advertise them, but I'm sure that if people are interested and they start looking, it just one thing leads to another. There is so much information there, whether it's on the internet or YouTube, etc. I mean, this is one of the problems today. I find that there's information overflow, and even this discussion, mine, it's over an hour. Very few people have the luxury of listening to an hour's discussion between two people, because there are unlimited interviews like this on the internet. So therefore, that's a problem in itself. And I know, because we have within the company, we do some chats. One of my senior colleagues and myself, we do some chats about different things in the world and discuss. And we did it for 15, 17 minutes. We decided to have it short. And then anyway, so we tried now with 10 minutes. And you realize that 10 minutes, your retention rate of listeners is much higher. And then one of my people who deals with these things, he said, you see, much better to have 10 minutes, because these are much better, much more effective. Well, I said, yeah, but the problem is with that is, if you let's say that 10 minutes had 60% retention rate, and 20 minutes had 45 or 50, i.e. retention to the end. And then, I said, but why don't we do 1 minute then? Because then we get 100% retention rate. So that, and 2 minutes you might get 97 or 98. So that's a dilemma. Where do you pitch it? But the problem is, as I said, there is no information overflow. So you are, as I said, long interviews can be very interesting, and there are some good ones that you listen to the end to, but a lot of people just don't have the time today. That's what point I'm making.
Yeah, I'm sure in this case with today's interview, they will be intrigued and we will have 100% retention rate, because
Right.
it's so incredibly interesting.
Right.
And I want to be respectful of your time too, though there is, I think, something still very important to highlight to the listeners. As mentioned in the introduction, you're dedicated to wealth preservation. You mentioned it a couple of times that precious metal is the place to be. But then also it's really important to look at the way you're investing into precious metal. So not every instrument serves the purpose, from what I understand. So there's a difference between, for example, buying an ETF on gold than buying the physical asset. It also is really important, I assume, where your asset is being held, just to be prepared for whatever.
Yeah, no, of course, that was the system that we created, because everybody has their own definition of wealth preservation. But so my fear is that the financial system might not survive in its present form, and that a lot of banks will go under, because in the end, okay, they will print more and more money, but that money will have zero value. So therefore, it's not going to save people. And the risk is that if you have money in the financial system, in the banks, etc., that money will, first of all, as I have already said, it'll be debased quickly because the more printing, the less it'll be worth. And secondly, there's a risk that, that you will not get your money back from the bank because it goes under, or it's bailed in, used for the debts of the bank or whatever. So that's the risk. And it's the same with assets in the bank also. If you have stocks or bonds or whatever, it's a risk that they also might disappear in the system. They are legally yours, but that, when things happen, and there's massive pressure, you never know what desperate people do desperate things. You never know what the banks or the governments are going to do. So therefore, we wanted to create a system where you eliminate counterparty. I mean, that's what it's all about. If you want to preserve wealth and eliminate risk, you take away as many counterparties as you have. There's always, so if you take gold, you don't want an ETF because that's in the banking system. Number one, all you have is a piece of paper saying that there might be underlying gold there, or there might not be. Most of the ETFs, and I've done analysis of that and I've done articles about it, most of the ETFs don't have real physical gold in their possession. And even if you have it, the investor is not going to get the gold anyway. So therefore, ETFs are useless it's a useless way of preserving wealth. It's just a paper investment, nothing else. And therefore, the way we looked at it, you always have one counterparty, because if you take the gold, buy it, have it physically in your hand, dig a hole in the ground and hide it there, that you still have that counterparty. The ground is your counterparty because it can just be stolen from the ground. So you always have one. So what we created is that we help people then to buy gold and silver and other precious metals. We buy it straight from the Swiss refiners who refine 70% of the gold in the world. So they are the top refiners in the world, obviously. So we buy straight new gold, and then we transfer it to one of the vaults of the client's choice. We have a vault in Zurich, vault in the Swiss Alps, and vault in Singapore. Now, the vault in the Swiss Alps is the biggest private gold vault in the world, and the safest. So that's a James Bond experience. It's a fantastic place, and there's nothing more safe than that in the world. There's nuclear bomb proof, earthquake proof, gas attack proof, and it's got 10 security zones, and you can't open it when you're there. You have to have 2 security centers in the country where nobody knows where they are, that open it at the same time as is open from the outside. And obviously visitors have to be pre-announced, etc. So that is a very special vault for higher investors. That business really starts from several millions. And then in Zurich we have a smaller vault, which is from $400,000. So we cater for the bigger investors, not for the smaller ones. We just that's just so. So therefore, people own their own gold. They can also transfer gold if they have it somewhere else in the world. We transfer gold from all over the world to our vaults because people want to have it in Switzerland or maybe in Singapore. So we do that for people. So people, we are not a counterparty. So the owner of the gold has his own gold bars or gold coins, whatever he wants to buy, and he can go straight to the vault even without us to look at his gold or take it out. So that is what we've deliberately done to eliminate ourselves as counterparty, following our own wealth preservation principles and risk principles. So it's an incredibly simple system. It's instant liquidity. That people buy ETFs because it's convenient. You can go deal on the financial markets with ETFs, but physical gold is the same. Okay, so once you set up the account, you can buy gold within minutes. And you sell it also. If people want to sell, it's instant liquidity also. They sell it straight away. Now, we can do that through the system, etc. Then it takes a few days to get the money because the gold has to be delivered to the buyer, and the buyer has to pay us. But because we don't actually speculate ourselves on gold, we only have, we have our own gold, but not client. We don't hold client gold that clients sell. So basically, it's a very simple system. And people have, we are the only ones where people actually have direct access to their own gold, and they don't have to go via the counterparty or the middleman like ourselves to ask, can you release my gold? They don't have to do that. They can go straight to the vault. So that's totally unique. also where we are unique, since we have high value clients, and we are, from that point of view, we are outside the banking system. We are the biggest company dealing with big clients in the world, and therefore we give a total personal service and advice and spend time with the clients, etc. They come and talk to us, come and visit the vaults, etc. So yeah, it's about, and that's what's, that's the fun part of it. Anyone can buy and sell gold and store gold, but actually spending time with people, discussing the risk, discussing the world, and helping them with solutions. That's the fun part of it, of course.
Thank you very much. And from what I know, correct me if I'm wrong, there's also no registration with any authority. So
no, we don't report to anyone, Simon. So we have no obligation because we're not a financial organization, and so we don't actually report to anyone. Of course, we have to go through compliance totally. So today, we're everybody dealing with money. So we have to obviously go through money laundering compliance, and we have to understand where the source of the funds, the origin of the funds, etc. And we have to be 100% certain about that, where otherwise we wouldn't accept. There's no. People believe that because you have private vaults outside the system that you can hide money, etc. That's not. It doesn't exist today. You can't. Those days are gone. Like the good old days in Switzerland, when people just opened a numbered account and nobody knew who you were, etc. A lawyer could do it for you. Those days are gone, and it's the same even if you buy gold. So we have to do all our due diligence in order to open an account, understand who the client is and where the money comes from. But thereafter, once the account is there and the gold is there, we don't report to anybody. That's true.
Thank you very much, Egon. This was an incredibly insightful conversation. Is there something you want to share? Is there a project, a product? Is there a recommendation you want to share with the listeners? Then that would be an amazing opportunity now.
No, well, first of all, obviously, I'm sure you'll have that on the people can, if they're interested, go to our website, goldswitzerland.com, goldswitzerland.com. But otherwise, I just again want to repeat that although my outlook for the world is obviously not the most bullish or not as happy as some people would like to hear, but I think life is good. Life and people, there's so much else, as I have outlined already. There's so many other things than material things. So and I think I think that the wonderful part is that we are actually, I think, going to spend more time together and helping each other and as families or as friends, network, etc. And I think that's a positive thing that will come out of this. Remember, you take a school like Eton in the UK. Eton has been there for 570 years. It's a top private school in the UK, a boarding school. Lots of prime ministers have gone there because it's a very good school. It's been through wars, it's been through revolutions, it's been through government upsets, it's been through economic depressions, inflation, etc. It's still there. The things change, but the world goes on, and we have this. The good thing about human beings, we're always optimistic. Sometimes too optimistic, and things go wrong for a while, like they will do now. But overall, we'll just fight on. And in the meantime, as I said, we have each other, and we will rely more on each other in the next few years. So I'm not a pessimist at all. For the people who hear about this first time, what I think was going to happen to the world economy, they might think that he's mad, this guy. But if you think about it and if you prepare for it, my view is I don't go and worry about this every day. I take the measures I can, and then I just forget about it. It's no use thinking, every day, worrying about your money, what's going to happen, etc. You do what you can, and then you live your life. There's so many things in life that just continue your life and enjoy it. So I think that's a very simple message, but I truly believe that.
That's a wonderful message. Thank you very much. And yeah, of course, in the show notes of this episode, we will share the resources discussed and also add your company and blog details so that people can follow, respectively contact you if they're interested in discussing or looking at possibly options. And to you, dear listener, thank you for following this conversation with 100% retention rate. And if you if you like what you heard, it would be awesome to give a rating to this show, and then of course look at Egon's articles. They are really interesting, really insightful, and entertaining too. And then also, of course, share this information with your friends to spread good information. And thank you, Egon, again for just being who you are, taking the time to be here and sharing your experience and your wisdom with us. And at this podcast, Beyond Perception, it's really about empowering people to live self-determined, free, and healthy lives. And it's a true honor to be on this journey together with you. And I really look forward to having another conversation or seeing you again in the future. Thank you very much, Egon.
Well, really good to speak to you. And as you say, I hope that we can help a few people. I mean, that's my passion. I hope a few people listen to it. A few people at least will think a little bit about what they've heard and they protect themselves and their family. That's really all we're saying. And enjoy life.